Good morning, everyone, and welcome to our series Fintech Fridays brought to you by BDO Australia. In our webinar today, we'll be discussing what's new in open banking. My name is Tim Aman. I'm BDO's Global Fintech Leader, as well as our National Financial Services Leader. Before we kick things off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but we'll be accepting questions throughout the session. And you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we'll follow up with you after the webinar concludes. If you are experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. Open banking is a developing trend in financial services, both challenging and enhancing traditional banks for new use cases and rapid deployment. And it allows companies to build applications and services that enable faster and more convenient payments, greater visibility into personal finances, and net new services. In February of this year, open banking rules were changed to allow full accreditation data consumers to sponsor CDR access. This has made it significantly easier for fintechs to access CDR data, opening the door for improved business cases and increased deployment. With me today is Buffalo-born Jill Berry, co-founder and CEO of Adatree. Adatree is an Australian technology company who are removing the barriers to entry to Australia's data ecosystem, enabling organizations to access and leverage consented data and allowing companies to build new, innovative, data-driven solutions. They're one of the first companies to enter Australia's CDR market. I'm also joined by my friend and top 1,000 tennis player in the world, Mauricio Benitez in Chile, founder of Fintegram. Fintegram is a financial education platform connecting the main actors of the ecosystem in an open, collaborative, transparent, and professional space. The platform allows information to access to financial services to be shared with all participants in the digital economy. Welcome, Mauricio and Jill, to the show, and thank you for spending your time on today's Fintech Friday.
Thanks for having us.
No problem, Mauricio. Jill, you've been on for a couple of years now on the Fintech Fridays. When we spoke last year, Adatree had been recently recognized as a ADR, accredited data recipient by the ACCC. Can you talk to us a little bit about what's been happening with Adatree in the past year since you gained accreditation?
Yeah, gosh, so much has happened. Let's see. So Adatree is a platform. We've gone from accreditation, which is a really important part of the licensing process, but it doesn't mean that you actually receive data. So then we've gone through this conformance testing suite process, which is basically all the technical and security checks that you have to do initially and then ongoing. So we're active as well. We were the first intermediary to actually enable another company to go live. So that company is Payable. They have a really interesting fixing mixed payments use case. So they're the first ones enabled by an intermediary. New legislation has come out about being able to sponsor other companies. We're the first company to actually do that. I think we've signed more than 30 new clients just across different use cases and industries and sizes of companies that are interested in accessing and leveraging data, but they don't want to do the hard parts themselves. They just want to focus on their proposition. But yeah, and then just starting to kick off a second capital raise right now. So a lot of traction.
That's good. And I think as we go through the next hour, you can probably provide some examples of use cases, because I know when we talked a couple years ago, it was more concept, and now you're probably starting to see things come to fruition and actually people developing use cases. So we'll talk about that a little bit. Mauricio, Fintegram is a brand new company that you started down there in Chile. For those that don't know, I worked with Mauricio at BDO, and he left and started his own business. So congratulations on that, Mauricio. Maybe you can explain a little bit about Fintegram. You've got some exciting projects that are planned, and they're you're looking to promote financial literacy for inclusion for businesses throughout the application of credit models, and you're really focused on big data and blockchain technology, which obviously Big data and blockchain technology is obviously very topical here in Australia. Can you talk a little bit about how you see this working for you and what your plans are over the next 12 months?
Sure. Thanks, team, for having me once again, and it's a pleasure to be part of the Fintech Fridays that I've been hearing from you guys doing this. It's a great events weekly basis, and it's also great to having all the fintech community get together in a weekly basis. Fintegram, yeah, after working 3-4 years in the fintech space and the ecosystem, I've been thinking about how can we grab this opportunity from the financial institutions standpoint of view, and the regulation that's coming out from years ago. And then I thought about for having and leveraging from that area, this fintech, grabbing firstly the option for the financial education literacy, let's say, in the sense that in LATAM we find some gaps in the SME space, and also for some medium and bigger companies. Actually, the financial literacy, it's a huge gap from the banking perspective. Normally, when they are trying to work with the SMEs, it's a hard for getting opportunities in the market. So firstly, what I thought in the first place was, okay, let's get that level up from the knowledge perspective. Therefore, my first approach was, let's say, preparing and getting ready the most high level financial education, financial literacy programs for SMEs. Looking forward to the financial inclusion with working with the banks. I've been partnering with several banks in LATAM, from Chile to Miami, Florida, let's say. My partner is based in Miami, and let's say we are kind of headquartering from the Miami, since it's quite interesting being there and operating all over LATAM. And then, of course, our final approach will be using blockchain and big data, gathering more information from the SMEs, certifying those companies, since we are admitted as a certification company in Chile and LATAM. We got the license, so we can provide indeed certifications to the SMEs. And what kind of certifications? Looking for business model, let's say, financial, tax, and legal status from the SME, and raising up the level from their compliance in the whole sense. So we are going with being the partner to the SMEs to get the financial inclusion, that it's our milestone for mainly, let's say.
Okay, well, I think that's going to be great to get your insights in terms of, obviously, Jill will talk really about the Australian, what's happening in terms of open banking, which obviously fast becoming open finance, which is what we're starting to see, sort of globally as well. So maybe we'll just come back to, open banking and sort of recapping, where we got to since 2017. The movement started in Europe in 2017 and quickly spread around the world. I think we've got a slide that kind of depicts, the spread of open banking. Australia launched its own version of open banking regulations in July 2020, and it's steadily gained traction. And there continues to be regulatory changes here in Australia, which makes CDR data more accessible and useful than ever. In February of this year, the government tweaked the open banking regulations to allow companies to act on behalf of consumers, which Jill was alluding to. They also added a new CDR representative access model, which allows fully accredited CDR users to sponsor other companies' access to data. So Joe, maybe you can talk a little bit about, what Adatree is doing in terms of representative access to CDR data, and how does that work in practice?
Yeah, absolutely. I think the representative model really came about because the government got a lot of feedback. They're saying it's really hard to get accredited. I just want to get my use case going. This happens with AMSLs. This happens with payments. Why can't I work with a company who's already regulated and get access through them? And so after a lot of consultations, they essentially did that. So that's what a CDR representative is. So say Adatree, an active and accredited data recipients for an intermediary that's enabling. We have all those systems and policies, processes in place, and a connection to every single data holder source available. And then so we essentially have to have a framework about, well, who is a representative? What's their use case? And ultimately, it's a separate representative agreement that like you said, an accredited and active company you can have representatives. So it was in December, the representative was officially live the first week of December, and we announced but we officially signed someone as a representative about 2 weeks later. So we're just super fast moving. Instead of announcing, they're like, oh, it's coming. We're like, and we've just done it. So ultimately, that was a company called Sherlock.
Okay.
They're a technology provider, and they're also a mortgage broker themselves. It's really interesting what they do about using data and technology to power different lenders and mortgage broker solutions. So with them, they're essentially our representative. They were looking at being an ADR themselves, and they're like, it takes a long time, it's a fair amount of money, it's a bit of a project, but representative is a way that consumers still get all the safeguards, all the security, and everything is in place. There's no shortcuts at all, except that they leverage our accreditation and come under our regulatory wing instead of doing it themselves. So it's a huge win-win, and that's how they can, their use cases and ultimately their services can go live with CDR way faster through the representative model. So it's actually a nice balance of privacy, security, and utility.
I think because when we talked last year, we were kind of looking out to say what was going to happen with open banking, and we had a lot of potential people within the Sydney marketplace in particular looking to become CDR accredited, but they weren't exactly sure what to do, and so there's a lot of stop starts with that. So I mean, I think we've got a slide later on that kind of shows, kind of the pace of change in terms of people starting getting into the different use cases. But I guess if you talk about use cases, what are you starting to see in terms of new ideas that are coming through from a use case perspective? And maybe you can just explain, how this actually works. So, because I think, we talked 2 years ago about use cases, but now what are you starting to see in the marketplace in terms of live examples?
Yeah, absolutely. So I think that there's a really big shift happening from smoother use cases to smarter use cases. So if you're a company, call it a lender, fintech, a payments company, it's easiest to implement something and lower risk for your company. If you're going to say, here's an existing process or a service that we do, let's change our existing data ingestion processes. It might be screen scraping, or it might be we get PDFs of statements or some manual attestations or something, and then just replace that part with CDR. So it's taking something that you do existing and just making it smoother, better customer experience, verified data, more reliable. And that's what we were starting to see. Of course, the most common use cases are, let's view your accounts in one place.
Yep.
Let's have faster loan origination. That's really unsurprising about where that was going, but it solved a problem and it was lower risk. So some of those have started to go live or will go live really soon, and we're starting to see the shift to smarter ones. So like one of our clients, Verifier, they have a safe loan product, which is a new way to, instead of just looking at loan origination, how can you look at loan monitoring, look at the financial health of your loan as you go, so you can identify a problem before it's a problem. So maybe defaults are just a thing of the past. Everyone focuses on getting a loan out the door, not how can we make sure that Tim's like financially safe and he doesn't get into trouble. Even talking to insurers that are looking at some brand new innovative concepts about how can we figure out along your life journey what products you need, what you don't need, when you're underinsured, where you're overinsured. They can do that with banking data as well, because you see your whole wallet. So this couldn't have been done prior to CDR. So there's some really innovative and new concepts out there, and a lot of like just other ones. One of our clients just went active called PayOK. They're fixing like business invoices to make sure that money gets paid to the right account, and making sure it's not a closed account. You might think, oh, that's a really simple solution, or that's a really simple problem to fix, but it's actually a huge operational overhead. So they're leveraging CDR for these really smart solutions. So just looking at payments, fintech, insurance, even government, they're starting to look at ways of how you can look at common things that Australians just have to do to give information to governments. And of course, it's fully voluntary, it's consented, it's secure, but we're looking at a lot of different use cases. And it's also shifting from people being like, what is CDR? How is this different from screen scraping? Tell me about it. And now they're like, I want to do this. I also want to do it next week. So just help me.
It's an interesting one, because I was having a discussion with one of my staff yesterday, just trying to explain what this is, and I think there's still probably a fair amount of education that has to happen. I think people have heard that term, open banking, open finance, and I think we'll probably say over the next 12 months, actual use cases that are coming across people's desk. We'll talk a little bit more about some of the security, because I think the issue is always going to be around consenting, and there's and we'll talk a little bit about confidentiality and things like that. So so you expect over the next 12 months just use case after use case, given the fact that people can leverage off an existing license?
Absolutely. Because they have the use cases there, and they're like, how do we do it? Just, it's not a question of what they want to do now, but it's more how. And then now, it would take weeks and probably 6 figures of fees to do so. Now you can do it in just days. And basically no onboarding costs at all. So that is a huge game changer.
So if someone comes to you today and they say they want to go live, like what's the life cycle for that to happen?
Basically look at some different models for them, and really quickly ask, we figure out, are you accredited right now? Do you want to go through your full accreditation? The only reason companies would want to do that is if they wanted to sponsor others. So most of the time, that's a hard no. And then we basically ask if they fall into a trusted advisor category. I like to call that the CDR get out of jail free. So if you are a mortgage broker, a financial counselor, an auditor, a tax agent, like an existing regulated entity, that means that you don't even have to. It's much easier than the representative process. So you could be up and running with live data in 2 days. Assuming it takes a day to do a contract.
So I mean,
signed, we can do it this afternoon.
See, so quite quick call. I know where Jill will be this afternoon, so if you guys want to find her, come have a chicken wing, and then you can get a contract signed. So
data, what more do you love?
So I think it's becoming more tangible. I think it's if I looked at the last 2 years to where we are now, things are moving a lot quicker. They're a lot more tangible. I guess Mauricio, kind of switching over to you a little bit, in terms of CDR, obviously with fintechs, this is obviously a game changer for them, because they've got access to information that traditionally they couldn't get, and I guess, when you look at some of the traditional banks or larger financial services firms, are you starting to see people start to think about how to utilize CDR more effectively to benefit from it, rather than, I think probably here is more of a handbrake, and probably globally it's people with the information didn't really willingly want to share it. But what do you think is going to happen in terms of some of the larger institutions, maybe what you're seeing in Latin America?
Yeah, sure. I mean, the CDR legislation that, let's say you just mentioned 2017 was the year that it was establishes and enforced. And this year in February, I understand it fully enforced the amendment from and improving the regulation in that regard. And it's a game changing status from the CDR phases. In my opinion, though, open banking from the banking and traditional banks institutions will be crucial, since more fintech will be allowed to get in access to those information. I was just mentioning that it's crucial to get those the data, and also detailing information from some, let's say, prospect to get better loans, better fees, better prices, better interest rates as well. I mean, at the end, it's as Jill mentioned, it's a win-win situation in the regard that companies will be allowed to get access in a better in a better position for getting better loans. The fintech companies will be allowed to offer better services as well. I think from open banking to open finance, let's say these 3 layers, steps from open data to open finance, we are pretty sure that this kind of regulation will allow to help the entire ecosystem. In LATAM, I would say we are still on the way. Of course, Brazil is taking the lead. We have some countries that they're allowed to be open, not anymore web scraping, not anymore getting like data from OCRs, reading old papers. It's just really taking care about the consumers, but also using the information in the right way for getting better deals in the sense that will be cheaper for everybody. And for fintechs, of course, it's like the best scenario for going forward. I mean, I think that I'm pretty sure that will be allowing to the new fintech to using information in the best way possible onwards.
Yeah, I think it's going to be interesting to see how, because I look at certain parts of the world that, we'll probably look to see what's been happening in open banking in some of the more established countries, and then you're going to see parts of the world just catch up quickly, because they'll see how things have played out, in other parts of the world, and they'll just fast forward to, instead of open banking, more open finance. And Joe, you kind of alluded to insurance, I guess. Are you starting to see anything sort of in, obviously superannuation is a big market here, 4th biggest, sort of globally. Are you starting to see use cases coming up more in that superannuation space?
I think, yeah, we're absolutely seeing the super ones, like largely about investment preferences, and making, it's like more transparent awareness of your returns. Then also thinking about, well, how can you combine different data sets? So if you're applying for a loan, how can you share your superannuation data through a few clicks and share your banking data? Is open finance. It will include superannuation, general insurance, non-bank lenders, and merchant acquiring. But it doesn't mean that those are all consecutive. Those can all be done concurrently. That's what the data standards body has put so much effort into, creating those economy-wide standards. So it's not just one, then another, but like, oh, well, let's hit go all at once. That's when you'll see an absolute explosion of use cases once you can have, different aggregated and combined data sets. Once you can, even energy is next. I forgot, we've already done the world's first open energy implementation, just something else we've done. And but just thinking, everyone thinks, well, what can you do with energy data? Is that really interesting? What can you do other than really switch from, from Energy Australia to Origin, you know, or something like that. I think that it's the whole idea of often you know that you might not be getting the best deal, but you're like, well, if I save $30 a month, is this really worth it?
Yep.
But if you can do it digitally, and if it's a month-on-month service, and you're like, well, even if you know, get a reminder to say, yeah, Tim, you have the best price in market, or this is the better one. Do you want us to switch for you? You'd be like, well, what a no-brainer. You can enable that. But even thinking about energy and banking data sets, you can think of, you know, not just your energy account, but you can say, well, I know where you live. I know what you pay for energy right now. I also know that you have a home loan. So let's look at what you could possibly save for solar. And then like buying that solar unit and then even having it included into your home loan as well. So just combining, I think that there's so many different product opportunities, just removing barriers for like, well, how can you figure out what you can do? I want to be more green. You know, I want the battery solar panel combo. How can CDR enable all of these? That I think it'll be like, it'll give rise to a whole new green premium and enable others to participate in that.
Yeah, I think you're right. And I think, you know, if you, and again, you look at the younger generation, ESG is extremely important. You look at the ability to combine data sets, you know, and again, I was trying to explain to people, you know, I've lived all over the world. I've got bank accounts all over the place. I don't remember even sometimes my bank account numbers, all those sorts of things. And like, how do you pull something together that I can make a decision at the click of a button? And Mauricio, this kind of links a little bit into your company in terms around financial literacy. So, you know, Jill was sort of explaining, you know, I would expect, you know, as given the rise of open finance in LATAM and your business, these would be the kind of things that you'd be talking to SMEs about.
I mean, for sure. I mean, if we would think who is liable for making it happen, it would be perhaps myself. My company's like looking for having financial consumers more educated, let's say. When we have financial consumers with a better understanding about financials, how is treated your information is crucial. I mean, if you are saying, okay, it's safe, we are considering all the regulation, we are taking care about your information, your personal data. Let's say you need to trust in the open banking platform. At the end, we need to create an ecosystem, an industry safe as safer as possible. Let's say in the sense that it's trusty from the consumer financial perspective. Will be the platform that will help us support onwards for getting finance, for getting leverage for the SMEs to improve in the market and then getting more profitable. I think we need to push a lot on being all the efforts positioned in that regard. I mean, consumers will be in a better position after we are helping and supporting that trustworthiness, let's say.
Yeah, I think trust, we'll talk a little bit more about trust because, you know, I think that's going to be, people need to believe in the system and the process. So I'll talk a little bit about some of the regulatory pieces and how you build trust. But I guess if we, you know, shift slightly about digital identity, because probably one of the things that this links a little bit in terms of the trust in the system, you know, and you know, here in Australia, you know, there's been a real focus to shift to the digital economy and allowing, you know, the Australian government's allowing just digital ID verification for non-government services. And probably through the pandemic, it's been a real big push in terms of vaccination statuses, et cetera. And there's about 6 million Australians that are using digital banking data. You know, but I think in terms of, you know, it's going to be quite interesting to sort of see where we get to from a digital identity perspective. I guess in Latin America, Mauricio, are you starting to see people fast forward on digital identity? And I guess if we look, I guess one of the challenges with digital identity is if it's just government by government or country by country, is how does this work for people that are global citizens, because I think that that's ultimately where we need to probably get to.
Yeah, I mean, definitely. So LATAM is like becoming like European Union, let's say, being very connected and linked. However, there are different jurisdictions, there are different laws and regulations. However, normally in the digital identity, what we are seeing is biometrics companies that they're looking for getting the information from, let's say, passports, let's say international information, for having either people operating from Venezuela to Colombia, from Argentina to Mexico. That are huge. I mean, distances are huge. However, since we are linked, we have the cultural or similar roots between the countries. What they're looking, fintech in itself, they're looking for having more this kind of technology for providing to the clients at the end the benefits for being consumer. I mean, otherwise it's very hard for the lodging, signing in mechanism, or at least listed those consumers to the applications. I mean, I've been seeing those situations. Otherwise it's hard. I think jurisdictions are allowing, at least in LATAM, they used from the new technology, and it's not anymore passwords. It's more like the new biometrics technology at the end. And I'm seeing that those technologies are used more and more in a month to come, and I'm pretty sure that countries will allow to using cross-border. I mean, if you're not allowing to those different countries using it in the times of pandemic, will be very hard for the companies helping those consumers. I mean, countries need to allow to the use of the digital identity at the end.
Yeah, I think as I get older and start forgetting where things are, I love to be able to have everything in a digital sort of platform. So you can just access it at a click of a button. And I guess, Jill, here in Australia, this isn't necessarily specifically your area, but you're probably sort of seeing it in terms of more around the trust, because when you're starting to talk to people about CDR and do the consumers trust the process, another element to it is around, are people comfortable using digital identity? So what's your sense of what's happening here in Australia? There's an uptake in trusting this whole process.
Yeah, I think that digital identity and CDR go absolutely hand in hand. It's really important. Gosh, I think that the Dev61 CX working group has been doing like customer user testing research since 2017. So when you look at the consent process and all the disclaimers and what's express consent and what can be pre-checked or not, it's literally years of research and testing that has gone into it, because you want it to be, a frictionless and fast process, but it's not like you just want to do one tick and send your life away. So I think that it constantly changes, but it is always consumer first. Gosh, one of our regulators is the OIAC, the Office of the Australian Information Commissioner. So basically, they have a number of privacy safeguards. Even when talking to journalists or clients or it's like, why would I trust this? And so I'm like, well, we're regulated. She's like, yeah, but why would I actually trust this? And like, well, the short of it is that we're audited. Like I have 3 government regulators. We have so many obligations, to the hilt. And if I don't do the right thing, I'm up for personal and corporate really big fines. But the long version of it is you can go read about 500 pages of legislation, and there's an incredible amount of trust with that. But I think that a lot of it really happen, like the trust will happen when you experience a use case. Because if you think, oh, well, why would I share my data? Look at this process. What can you do with it? It's very theoretical and quite like arbitrary on paper. It just reminds me of when I was a product owner at AMP Bank when contactless payments came out. And first, you didn't realize the concept of it when you didn't realize how powerful it could be. Like, what happens if I drop my card and someone goes and taps away and then suddenly I'm out of the money and what am I going to do? And you think about those type of things. But now I'm just like, if I can't tap, I'm like, I literally haven't had my wallet with me in about 9 months. If I can't Google Pay, like I'm walking away, right?
Yeah.
So I think that it's the pros in the pudding with when people start to get the use cases, when they see the value exchange, when they're like, this is a whole lot easier. I don't have to get paper. It's much more secure. And I just said, hey, delete my data. You can't sell this anymore. So I think that the trust will happen when the use cases are really live. Gosh, I can't wait for a digital identity to be included in CDR. Because if you think about switching as a service, and if I really want to commoditize bank accounts, and I can, open accounts, transfer my money, and then switch all the payees, close that one. You need digital identity, so like the ability to rely on someone else's assessment, or just have a centralized tick of this is Tim, so I don't have to go collect your license number and your Medicare and all of that anymore. That removes a lot of friction. I think that Australians would just be so much better off. They're like, I've proven myself. Let's just make it really easy to open and close accounts in a secure way.
It's going to be interesting because I think, and again, we're probably lucky, Mauricio, in Latin America, you guys are, a bit on the cutting edge in some of this, and obviously in Australia we are. I was joking a little bit about if we go back to the US, we can't tap anywhere, and it's sort of throwback. And so I think it's going to be interesting to see, from a global perspective, we know the whole world has to sort of catch up around open banking, open finance, and digital for this to really work. But I guess in our own sandboxes, it's working quite well. Just want to switch gears a little bit in terms of the regulatory environment, because we talked a little bit about trust, but I think probably the underlying issue is really around data breaches. Under the new open data regime, there is obviously potential for large scale identity theft. You've got geopolitical issues with Russia, Ukraine, Belarus, and risks of cyber attacks. And obviously the worst thing that possibly could happen would be a large loss, due to something that happens within the open banking regime. So I guess in terms of regulatory frameworks are probably obviously geared up to limit that, and obviously they've been somewhat slow moving. But I guess what's your view in terms of how regulatory frameworks should be established? Maybe Julie can talk a little bit about how Australia has been set up and what do you think has been working well, or what do you think could possibly change? And then Mauricio, I'll talk to you about Latin America.
Oh gosh, I feel like Australia is so different than other countries, just because I think it's going slower than what companies or consumers would actually want. But knowing that Australia didn't set up open banking, they've set up the consumer data right. So how can they make industry agnostic rules and technical standards? So you can go from sharing banking data to energy, telco, and insurance, and only have to adjust a really small amount of data that's been able to share. Like, obviously it's set up for banking data right now, but looking at energy metering in the future for energy. So they only make those tiny tweaks. So I think that it's been slower than expected. I can talk about it from a technical point of view. I was appointed to the government's data standards advisory committee. We talk a lot about what can be faster, how to include more industries, what is success, how can we get more use cases going. And also looking at other countries like Canada or New Zealand who are considering it because they want to have their own flavor, but also not reinvent the wheel for it too.
Yeah, it's interesting in terms of, I think, we see this in other regulations, we see it a lot in cybersecurity where there'll be regulations, but people don't want to exactly follow the same rules. Like obviously from my perspective, consistent rules cross-border would make my life, a lot easier.
Happy certification, let's go.
Yeah, so I think that would be a lot easier. I think in terms of, maybe you can talk a little bit about sort of the 4 different models that you can gain sort of CDR approval, and maybe just talk a little bit about the cost with that.
Yeah, absolutely. So the first one, the OG model, it's unrestricted accreditation. So this was the only option in the past, and it means that you apply to the regulator. You have to have 20-ish policies and processes documented and written. You have to either have like a flavor of SOC 2 or an ASAE 3150. Things I never knew about before, CDR, but now I'm a good expert in a different information security assurance report completed by a third party like yourselves. So think that you have to do that, and then the ACCC accredits you. There's a lot of liability on you as a company, and the directors, because it constantly changes, and that's accreditation. Fast forward to now, the new ones are like essentially representative, trusted advisor, but also insights as well. I'm checking affiliating with representative. So I get asked a lot, why would I ever want to be accredited right now? And like I said before, it's only really to sponsor other companies, because there used to be a fanfare and PR and push when you're like, so-and-so's accredited. That's not a thing anymore.
Yeah.
I feel like those PR days are gone. And then so you can be a representative. You're like, I just care about my use case. Give me access to the data. They still have to meet all the technical standards to do that. So our most recent representative was registered, I think yesterday. It's been a long week. And it's called Wave. It's basically a payments company. So they want access to CDR. So we have to do an assessment of them, and they still have to follow the rules, but they're under our wing. The other one's trusted advisor, where you have to be one of the specific regulated industries or bodies, or basically professions. And they're like, all right, well, I'm an auditor. I already have a lot of privacy or regulatory obligations right now. Let's leverage that. Let's not reinvent the wheel. So then we basically consider them a TA, a trusted advisor, and then they can get access to the data. But there's also an insights model as well. And that's for a company that says, do you know what? I don't want to have to receive all this data. I don't want to have to deal with all the controls for it. All I want to know is is this person, like, did this transaction happen, or is this valid, or more of like a low risk yes or no. So say if you just want to like verify an account or check to see, will like, does Tim have an X money in his account, so I can just pull or push a payment, or just Tim, you can own this account. So they're like, I just want an insight. I just want to know. So that's how you can, or basically someone like Adatree, we'd collect the data, we'd analyze it, give you that type of answer. So then companies can get an insight. It's not CDR data. They don't have to be regulated. They don't have to be accredited, a representative, anything. We just give that, so then they can just perform their service. They get real-time verified data out of it. So there's lots of models. It's hard to keep up. I'm sure there'll be more in the future, but that's the fun and the challenge of my job.
But I think the good part, obviously, for you is, like, if you look at the slide, there's a lot more infographics, companies on here in terms of the different. There's been a lot more activity over the past 12 months. So you're starting to see people really try to come up with what's the right model that works for them. And I think the way you've described it is, it's one size doesn't fit all. But you've got, even if you're a small player and you want to your point, like verified data, you can still look to do that. So it's less cumbersome. I think, it's interesting around the accreditation piece, because again, a lot of people wanted that for the fanfare of being an early accredited recipient of data. And I think that's probably died down a little bit. I do think, again, from my perspective, this will become more of a controls process, because there will be elements of control that still companies, have to do kind of around there. So I think it's a revolving space. Mauricio, maybe just jumping back to you a little bit around coming back to the regulatory piece, because I guess maybe you can explain how the regulators are approaching open banking in LATAM.
Yeah, sure. So In Latam, really first country that established at least or having a fintech law or open banking legislation was Mexico. That was a couple of years ago that it was implemented and enforced this fintech law that quite regulated a little bit about the open banking. Then they came up a couple of countries that also considering open banking regulation. Actually, the Chilean draft of this coming legislation that it was just approved by the Congress, and we are waiting for the final publication of the law that comes from after that. A step would be enforced in Chile. We have one chapter just exclusivity for the open banking. That was great. I mean, establish what are the parameters for financial institutions using information, how their big banks need to having open APIs for institutions for linking with those financial institutions, regulates how they should use the information. It doesn't establish yet some entities that should be either accredited or licensed to using or being the recipient for that data at least in the draft that it was approved. But I think that they are the best. Those examples are the best uses for the information. At least those entities using and being accredited for receiving the information. And I think that with this new regulation, let's say from Chile perspective, will be allowing to companies, fintechs, use being licensed, let's say, to using the information as well to providing financial services to the consumers. That it's the final goal and milestone. And let's see what happened with this coming regulation. But that's the trend. It is something that is happening. We have some countries that they already have the legislation. However, the first ones, let's say, they're kind of with the background from the European legislation. Let's say they just copy paste those laws, and then it wasn't like really in the market to be in the case by case. Or at least on the ground basis. It was just, theory is not always doesn't talk with reality sometimes. And the countries that now they're approving the laws for the open banking are learning from experience and seeing that we need to just at least thinking deeply about the details from the regulations perspective, and then approving those new legislations. But they are coming, and they are using the best cases in the international standards.
Yeah, I think Mauricio, it's an interesting time in Latin America, obviously, with about half the adult population being underbanked, and you've got in your country 179 fintechs plus or minus yours. And it's a great opportunity, I guess, to promote financial inclusion. So I think the regulation has to be properly balanced, not to stifle innovation. And so I think it's going to be interesting to see kind of what happens, down in your country.
I mean, definitely. A year ago, it was like a half of fintechs. It was like 100. Now we are close to the 200. We are doubling. They're coming. I think in that sense, government and our Congress they are thinking from that regard that we need to financial inclusion is crucial. We need more consumers banked, or at least by fintechs. Let's say fintech in that regard rather than banked. But they're coming even more. We need educated consumer. However, governments need to support the and opening doors to those fintech that they're coming up in the market. And with this regulation allows to, as I mentioned, banks normally close the opportunity for APIs to being linked with the entities. Now with this regulation, we allow to more fintechs and new institutions that they're covering this market getting that information. At the end, it's the crucial for us for Fintegram. We need more data. I mean, if we're certifying those companies from the tax bureaus, from credit scoring, we need to use that information for certifying the SMEs. So if we're allowed, the market will be more dynamic, will be cheaper to everybody. It will be a win-win situation.
Yeah, so I guess it's going to be interesting to see what happens there. We've got a couple questions that have sort of come in, so I might just sort of change tact and ask the questions because we only have a few minutes left. So one of the questions is, what is the alternative for individuals who see what is on offer and decide not to trust open banking, not want to use tap and pay, etc., but want to stay with cash? Where's the choice for the consumer? So I guess you fast forward, are we going down the mountain and everyone's going to be pushed down open banking, but there could be a cohort of people that don't want to follow that particular pathway? Jill, what would you say to that?
So I would say that the CDR is underpinned by 4 C's. This is a quiz about like,
Jill,
tell me about the legislation you memorized. It's confidence, competition, choice, and convenience. And then so ultimately, choice is the most important part of it. Electing to share your data is voluntary. Tapping your card instead of using a PIN payment is voluntary. You never have to do this at all. This isn't trying to shut out competition. It's not trying to ban other ways of data sharing. So sure, it's about making things easier for consumers. So instead of downloading all your statements and sending it to a mortgage broker or a real estate agent for a rental application, or downloading your superannuation statements, you can always do that. But it's like a manual, more cumbersome process. It's more about like the value exchange, a better experience, and increased security over it. So you're never going to be forced into it. I think that what the government has, what the UK government has done is actually banned unscrupulous processes. So when so it's basically screen scraping, when it's like the practice of sharing your username and password, and you might do it for a loan application. But if you never change your banking password, the underlying company that offers that service, not necessarily the bank, but the service provider behind it, they're always going to be accessing, harvesting, storing your data, and you don't even know about it. That is not okay. The CDR is basically a replacement for that. They can't sell your data, they can't keep it, they can't use it for other purposes. So if you want to keep using cash, want to keep, sharing your paper statements, go do so. It's just one more task in your life that you have to do.
It's going to be interesting because I think, I kind of noticed this during COVID lockdowns in terms of ATMs. So the number of ATMs with cash dwindled. And so I'd wander randomly, illegally coming into the office during COVID, trying to find an ATM with cash.
Oh, rogue auditor.
Yeah, I was. But I think in terms of, you can start to see where some people would say, if you come back to the traditional banking environment, you could go to the high street, come into a branch, talk to someone. You're starting to see that evaporate. When I was down in Brazil, you'd walk that, you'd go be in Curitiba, there'd be 100 ATMs. That's probably now shrunk down to hardly at all. So you can start to see there's going to be, people of a certain age will be, I guess, pining for things of how they were done in the past. And so I think it's going to be a bit of a balance between some of the digital change, which probably a lot of people are going to like, but people having that ability to trust the process, that if they don't want to follow that, they can opt out. Mauricio, do you think, I guess, because you're coming from a slightly different perspective, because there's still a lot of underbanked, unbanked people, do you think people are really going to, fast forward and accelerate and jump on using things from a digital perspective once things are up and running there?
Yeah, I mean, from our region, we have different realities. Some countries, they are totally unbanked. They're like using cash for everything. It's just there are countries that they're not digitized in the sense that they're not used to using the digital banking or services that will allow to operate remotely. But we have other countries that are very, let's say, digitized. They are really using cash. They are cashless mostly. We have from Mexico that even credit cards are not used. They're just using cash for all the operations. They're carrying with bunch of bills still. But we have different reality from countries that cashless, QR codes. We have some companies that they are operating, let's say, in the south of Latam, Argentina, Chile, and Brazil, that for e-commerce you are mainly using not even credit cards. You're using, as I mentioned, QR codes and near field communications, but really on the field. I mean, you don't see that much, and ATMs are disappearing. I mean, they're just going now. They are taking it off from all locations. We have more than a half. I mean, at least after the pandemic, if you see down the street, you don't. It's hard to find ATMs nowadays.
Yeah.
I think that's the future for countries that are more developed in that regard, that using neobanks or at least digital services. But we still have some countries that they are very back on the time, using, like in the 80s, 90s, same sort of kind of services, going to the facilities, going to the branches, checks. I do remember when Check 21 came up in the States, and we thought, why? I mean, checks. I mean, what are you talking about? It's like very like the ancient times using checks, and but yeah, now we're seeing more and more kind of Alipay and WeChat kind of stuff from the Asia in Latam. That's very interesting nowadays in Latam. That kind of crossing cultures and using the best technology nowadays in the financial market.
Yeah, I think we're run out of time, so I think we'll probably stop the conversation here. But I think again, it's this is the third time we've talked about open banking. Every year it gets more and more interesting, and I'm glad that we've had Mauricio been able to jump on to talk a little bit about Latin America. So again, thank you both for being on. I guess, Jill, one final, any predictions for next year? Will we be in Phoenix in February at the Super Bowl? Is that the plan?
Oh my God, I really hope so. Like Phil's told about the Super Bowl spot this year. Like that's the most important prediction we can make right now.
Yeah.
Not about the year.
Yeah. So real focus is Buffalo Bills Super Bowl next year. Mauricio, you're free to join us in Phoenix. It's a short flight up from Santiago, so we hope to see you in February.
I will. It's just overnight flying. It's just perfect, and we'll be there.
So again, thanks guys for participating. That brings us to the end of the discussion, and hopefully everyone found that very insightful. I know there are a few other questions. We'll look to circle back with the questions that we didn't get a chance to. Now you'll see on your screen the next detail of our next webinar. And the next session, we'll be talking about payments, and then we've got a few other sessions coming out through the year. I'm looking forward to all 4 of those. The last one of the year is going to be quite interesting because in the fintech space, we keep getting a lot of questions about customer acquisition. So we're going to spend a little bit of time exploring that. Finally, before we close the session, we'd appreciate if you can fill out a short feedback survey, which will launch once we close the webinar to help improve future sessions. And again, thank you for joining. Happy Friday. Thank you very much. Have a good day. Bye.
See ya.